Give me the cliff notes for how you're going to fix FICC.
So today's presentation, Alix, was really a response to investors who were saying two things. What's the growth strategy? What's happening with FICC? On growth, we outlined a broad series of initiatives across the firm, identified $5 billion, which has marginal ROEs of 30%. Within that discussion, we also spent a fair bit of time talking about fixed income, our position in the marketplace, what we've done with the business over the last several years, taking resources out of the business, and we identified $1 billion of a growth opportunity for FICC also as part of the $5 billion collective strategy.
Well, let's start with FICC for a second. So if you're looking at net $1 billion FICC revenue over the next 3 years, to someone like me, that doesn't sound like that much.
So one thing that's very core to the discussion today about the whole growth discussion was we made a series of assumptions. One critical assumption is the environment doesn't change.
As in low vol, that kind of thing.
All aspects of the environment, nothing changes. We felt that was the way to provide our investors with maximum clarity about the impact of these. So we assume nothing in the environment changes, and then we went through business by business, FICC specifically, but also banking, our markets lending platform, and identified the revenue opportunities across the next 3 years. As I said, it totaled to $5 billion. But critically, these are achievable because they grow our client footprint and they're accretive to the firm. And importantly, these are not new. This has really all been underway, and there's detailed plans behind all of these.
What I have a hard time understanding, though, is that when you have a VIX, say, at 11, if the VIX stays at 11 next year and the year after, are we going to have to be having a very different conversation, meaning that other banks have been navigating that environment for years, and now you guys are starting to turn in that environment? Walk me through what happens in that.
So one of the things we went through in the presentation was the difference between us and some of the large universal banks. Some of the differences are quite obvious. $2.5 trillion balance sheets versus our $900 billion balance sheet. But again, the underlying assumption is the environment doesn't change. So where's the growth? In fixed income, we identified $600 million that allows us, as we grow market share, to drive revenues. How's that built? By very specific client plans. And as we talked about in the conference, it's well known we're number one with hedge funds, but we're number 3 with asset managers, and we're not satisfied with that. It's unacceptable. And we can provide lots of value to those clients.
I guess what I was kind of getting at is other banks have already made those changes. And I'm really thinking of Morgan Stanley in particular, of course, because they trumped you guys in FICC for the last 2 quarters in terms of trading also. And the question becomes, are they also just better at navigating that new environment? And are they also taking on more risk where maybe you guys aren't?
Morgan Stanley's a great firm. I don't have any insight into what they're doing. I can only talk about what we're doing as a firm. In FICC, if you step back, and we talked about this at the presentation, the industry went through dramatic growth from 2005 to 2009. In 2009, our market share peaked at 19%. The industry revenues have essentially been cut in half. Our response to that decline was 2 things. One, we focused on our clients, maintained our presence, but we also took resources out of fixed income. We cut capital, risk-weighted assets by close to 50%. We reduced compensation by 30%. We reduced the balance sheet. We were able to do that during that decline. And what that enabled us to do, Alix, was reallocate capital across the firm. But we also returned $35 billion to shareholders over the past 5 years. That's 40% of our market cap. What we created was tremendous operating leverage. And so from here, and hey, if I had $2 billion of revenue opportunities in the current environment, I'd share those with you. But the $1 billion with our operating leverage as part of the $5 billion, it's quite significant.